Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. Again, you know the drill. Anyway, yesterday on Sunday, I issued my extensive weekend market newsletter where I review the markets, commodities, trade ideas, crypto, and trading systems. Do a very thorough technical analysis review of the markets. Again, I posted that yesterday. Normally I don't post a second YouTube video the next day, but wanted to do a quick follow-up on what I discussed on the weekend. We talked about the markets being quite oversold. We were looking for an oversold bounce, and we had a nice oversold bounce today. A couple things. Our mean reversion systems, as you know, we have 21 of these mean reversion systems with about 90% winning trades historically. These went long last Friday. Here's the SPY. You can see the entry. And on ES futures. These mean reversion systems have around 90% winning trades. And we got a nice bounce today. Now, they're not looking to exit yet, but should we get another update or an up day, these may exit. I, of course, email these out to our subscribers for our website subscription service. So that's one reason to be a subscriber of Breakpoint Trades. Also, the volatility systems, I discussed these. Last Friday, the QQQ volatility system went long. That so far was a nice entry of today's bounce. Today, the DIA took a first entry. That's the Dow Jones ETF. And the SPY ETF took a first entry. Again, these are based on the volatility systems. I have 12 of these volatility systems. And they all have decent stats. Just for an example, here's the DIA, Dow Jones Volatility System. Has a profit factor of 20.25. That means for every dollar it loses, it makes approximately $20. So very good profit factor if you know your systems. Profit factors of 3 are generally considered great. So that's knocking it out of the park. 147 total trades going back to the late 90s. 86.4% winning trades. Again, these volatility systems tend to be shorter term, kind of mean reversion. Average is about 4.5 days for this, and that's typical of these type of systems. Okay, anyway, let's go ahead and get back to this video at hand. Again, I just did an extensive video on Sunday, July 22nd. Today is Monday, July 22nd. Anyway, let's go ahead and get this recording started. This is for our back-end recorder system for our subscription service. Again, if you're on YouTube, you should consider subscribing to us because you're missing out a lot of awesome information if you're just watching our YouTube videos. As a subscriber, we have 5 newsletters a week instead of just 2 that are posted on YouTube during the week. We have dozens of actionable trade ideas. We have all these mechanical systems, which I send out trade notifications for. We have an active community. So a lot of great stuff you're missing out if you're just on YouTube. Anyway, I'm going to get this recording started now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, July 22nd newsletter. As you know, I just did the extensive weekend newsletter. So mainly, I'm just going to follow up on some items here, guys. As far as the table of contents, again, same general theme as I always keep. First off, we have the opening statement. Then I'm going to go into the mean reversion systems and the volatility systems that have been going long. Nice trades on those all so far. Then I'll move on to the general market indexes. We'll look at also some indicators, the VIX, and the bond market. We'll review some of the sectors, US dollar, Bitcoin, commodities, precious metals, and trade ideas. By the way, I did add a handful of new trade ideas this evening. Remember, we are in earnings season, guys. Tomorrow we have Google and Tesla. I think on Thursday we have Meta. All right, and then the following week we have other names. So we are in the heart of earnings season. Generally, the market holds up during earnings season, so we'll see if that is yet again the case. Again, on the weekend, I stated I was looking for an oversold bounce rally in the market, and we got that today. S&P was up 1.1%, Nasdaq was up 1.5%. The Russell 2000 was up 1.6%. And most of the individual market sectors were up, save for energy, which was down slightly. And most commodities bounced, save for crude oil, copper, and gold. Again, now we'll see what unfolds in this bounce. We were expecting an oversold bounce. That said, there's still a myriad of options here. Number one, we could have completed the lows and we go back to new highs from here. Or this could be a wave A. Then we're getting this lower high wave B bounce, right? Once that's over, then we get another move down in a wave C, okay? Or we could form a sideways coil. Again, too early to say which one of these, but we were expecting a bounce today and we got that. And I think we could still bounce further up here even if we form a lower high. On the S&P, the next resistance zone is anywhere from 55.84 to 56.14. All right. Let's move on. Let's discuss some of these trading systems. So here's the mean reversion systems that went long last week. I sent out trade notifications on these. First off, the SPY went long last Friday. You can see on the upper left here. Again, mean reversion systems, guys, they've been pretty quiet this year because of the very strong market trend. They buy pullbacks and uptrends. We haven't had many pullbacks this year. You know, we had a little minor pullback there in May. Obviously, we had a nice pullback in April, which the system's caught. Mean reversion systems aren't trying to catch huge moves. They just try to get in, catch a trade opportunity, they get out. As far as catching long uptrends, that's where the KISS systems come in. Okay, but nice entry on SPY on Friday, nice bounce today. System has none of these are looking to exit yet, but should we get another nice follow through, these may start to exit. I will of course let all of these subscribers know. If you're not a subscriber, you're just on YouTube, that's a reason to be a subscriber. So the trend pullback triggered on Friday for SPY. That same subsystem also triggered on ES futures, and we also have an entry from the QE Momo on the ES futures. Next, this large image, number 3, shows you 6 of the volatility systems. Now, I haven't officially been emailing these out, all right, but I do plan to sometime in the future. These volatility systems are also kind of mean reversion like. They have quite nice statistics. So last week on Friday, the QQQ volatility system took a long trade. That's the bottom right one. And nice bounce today. You can see previously it had done a short there in July. It did make some money on that, so caught a trade there. So that went long on Friday. I did mention this on our trading community. I didn't email it out, but I mentioned it on a trading community for those who may want to follow. That's another reason to check out the trading community, guys. Now today, 2 more of these triggered. The SPY volatility, or the DIA, Dow Jones ETF volatility system triggered first entry, and the SPY triggered a first entry. Remember, the SPY, these are volatility systems, is based on the VIX closing back inside its Bollinger Bands. So there's a volatility index for all these. So it's VIX for the SPY. For the Dow, it's VXD. And for EM, you can see it's VXEM. So anyway, these triggered along today. Next, taking a look at this trade statistics to these volatility systems. So here's the QQQ volatility system. I discussed this one on the weekend, but profit factor of 10. What that means is roughly for every dollar the system loses, it makes 10 bucks. That's a pretty good profit factor if you know your systems. 84.9% winning trades, 185 total trades. This goes back to the late 90s. Again, these are mean reversion type systems, so they tend not to be in trades for long periods of time. You can see average is 5 days, 15 hours. The winners, 4 days, 15 hours. Losers, about 10 days. Next, image number 5. So here's the DIA volatility system that went long today. This one has an amazing profit factor of 20.25. That's really high. So again, just to give you an example, system made $12,611. It only lost $622. So how you get your profit factor is you divide the gross profit, divide by the gross loss, and you get this number. Okay. You know, for example, if you had a system that made 1,000 and lost 1,000, you divide them into each other, you get 1. That would be a profit factor of 1. That would be a break even. So if you had a system that made $2,000 but lost $1,000 in the gross, you divide it, you get a profit factor of 2. So a profit factor of 20 is excellent. 86.4% winning trades, 147 total trades. Very nice profit curve. Again, average of 4 days, 17 hours for the trades. And finally, chart number 6, here's the SPY volatility system that went long today. Profit factor of 22.58. Awesome. Listen, has about 100 trades. About 89% winning trades. Average trades about 5 days. Nice profit curve. So there you go, guys. And again, I do plan to make these an official part of the website eventually and then send out notifications for these as well. As you know, mechanical systems are my passion. All right, moving back to the general market newsletter. So item number 7 shows the index sector table, what transpired today. Again, nice gains across the board here for the indexes. Up all about 1.5%, 1% for the S&P, 0.3% for the Dow, which lagged behind a bit. And as far as the major market sectors, out of the 21, most were up today. Only thing down was some of the energy areas. Metals and mining were flat, but nice gains across the board here. Semiconductors were up 4%. That was the strongest sector, followed by technology. U.S. dollar was essentially flat today. Bitcoin was also roughly flat. Commodities mostly to the upside here. Okay. Crude oil was down slightly, 0.3%. Copper down 0.9%. Sugar down 1.4%. I don't trade sugar. I doubt any of you do either. But most of the commodities bounced back nicely. Precious metals were a little mixed here. Gold down, silver slightly up. GDX slightly up. And as far as the bond market, slight bounce today in the 10-year, 30-year Treasury yield. Next. Item number 8 shows the economic news calendar. Tomorrow, the 23rd, we have existing home sales. But remember, guys, we're in earnings season. So your trade individual stocks, check for earnings, okay? Because holding stocks, short-term trade ideas into earnings can be a crapshoot. All right, moving on to the charts. Chart number 9, here's Google. This reports tomorrow after the close. You could see, remember, it had sold off for the last couple weeks. But it came to the 50-day moving average, and I thought likely this would bounce maybe into earnings, and so we're getting that now. Chart number 10, here's Tesla. This also reports tomorrow after the close. We'll see how this does. So far, this is consolidating. It's kind of like a 3-wave consolidation so far. Again, we'll see if this ends up being a simple ABC or some kind of coil, but it's likely to pop either way in earnings tomorrow, guys. And chart number 11, here's Meta. This reports on Thursday after the close, July 25th. Now it's bounced back a little bit. There is some resistance to these moving averages up here. Again, we are in earnings season, guys, so plenty of other stocks are reporting. Let's move on. Chart number 12, here's the chart showing the 5 key major indexes. Again, last week, early last week, we were quite overbought. The Dow was above its upper Bollinger Bands 4 consecutive days, so it pulled in there. Bouncing a little off the 90 EMA today. Again, everything bounced here. Let's move on. Chart number 13, here's the Dow Jones. Nice pullback, but this is a big support area. Haven't quite gotten to it yet, but, it's around the 90 EMA. So if you're wanting to get into Dow, early last week would not have been a good time to be chasing that. You should have bought a long position on this coil break or even a little bit higher than that. But down in here, maybe an area to start to nibble on it. Remember, the volatility system went long today. Chart number 14, here's UNH. I meant to remove this, guys. That's the largest component of the Dow. That's one reason the Dow rallied so much as well the previous week, pulling back a little bit. Chart number 15, here's the Russell 2000. Now, this is the weekly chart. Remember, last week, price got into this supply zone, got it quite overbought there after breaking out of the coil, and pulled back logically. It's now trying to come back. Chart number 16, here's the daily chart of IWM. Remember, absolute textbook coil pattern. I love coils. They're very easy to trade. Coil patterns, you could buy within the pattern, put a tight stop below the trend line, or you can wait for a breakout. But love coil patterns because they produce powerful moves. They call them coiled springs for a reason. Energy builds up, kind of like compressing a spring or stretching a rubber band, and then it releases. Okay. So again, a couple ways you could have traded this. A few ways. You could have bought it in this demand zone, which we've had in place for weeks and weeks. You could have bought it inside the coil here with a very tight stop below the trend line, or you could have waited for a confirmation break of the coil, which was right here. That's a breakaway gap. You could have bought that. Anyway, today it bounced, notice, right off that 9 EMA. That's your first support. Chart number 17, here's the 60-minute chart. We had a beautiful, it's a 2-hour chart, we had a beautiful coil, breakaway gap here. You could have chased that gap if you weren't already long, or you could have bought within the pattern. All right. Remember, I discussed on the weekend you had no MACD divergence here. It was very overbought, but no divergence. So now we're getting a bounce. Chart number 18, here's the equal weighted S&P. It also had a pullback. To me, this is a beautiful pattern. It looks like it could be flagging. I would be looking at this sector. Chart number 19, RSP, that's the equal weighted ETF. So similar pattern. This is also one to watch. You get a tradable pattern. Moving on to the S&P 500, chart number 20, here's the S&P 500 daily KISS system. Now this is our custom version. We had a nice pullback. The smart trailing stop was not hit on this. It's still wider at 54.25 roughly. Otherwise, these DeMark counts have been pretty useful. You can see we've had DeMark 913 combos all led to pullbacks the last few times, so including this time. Chart number 21, here's the 4 time frames. All I want to point out here is, ATR, we're below that on all the time frames. The 78-minute, we're nearing the underside of ATR, so that is first resistance. On the 130-minute, it's a little bit higher. Notice how we had a DeMark 13 on the 78-minute, DeMark 9 on the 130-minute, and we've bounced from there. Moving back to the standard chart, chart number 22, here's the daily. Remember, we closed right in this coil trend, or this channel trend line on Friday. So far, bouncing off of it. Should we form a lower high and lose this channel? Like I said, there's bigger support down here. There's an open gap. There's the 50-day moving average. And you have an uptrend line connecting the October lows to the April and May lows. So that's a bigger trend line support down here. Chart number 23, here's this clean daily view showing that demand zone. We closed right into that demand zone on Friday, and we bounced right off of it. So that was a good area to buy where the mean reversion systems went long. Chart number 24, here's that S&P chart with the focus on the 60 stochastics I've been talking about. When it's trending above 80%, you're in a momentum uptrend. You can get these mean reversion system triggers when these short-term oscillators get oversold. But I pointed out on the weekend this was right near the 80% area. So it was an area to watch for potential bounce, which we're getting at the moment. Chart number 25, here's a 60-minute chart. Again, we bounced off that little support area. You can see the demand zone here. You could also see the other fibs below down here. Should we get a lower high and another move down? Here's the first demand zone approaching, guys. The supply zone. That's why I think we still push up a little higher. And, if we get up into here, that'll be an area to start watching to see if we get a reversal. But I think we still push up higher. Chart number 26, here's the 2-hour time frame. Remember I talked about this move, ABC down of A. Maybe we get a lower high wave B in the supply zone. And we could possibly get another move down in a C. Again, these wave 4s can unfold in many ways. You can just be a simple ABC3 wave. You could have a coil, whatever. But we'll see what this does. This also could have been a major bottom when we go back to new highs. You don't know yet. Either way, we had an objective long down here on Friday. Chart number 27, here's a 30-minute chart. Again, beautiful little rising wedge we showed earlier last week. 5 ways, MACD divergence, played out beautifully with it. And this was a breakaway gap to the downside. Anyway, nice bounce. This is the first resistance right here at the July lows, 55.76. Otherwise, this is mainly your supply zone right from here, 55.84 to 56.14. Notice the 50%, 61.8 fibs are in that boxed area. Chart 28, here's the 15-minute chart. Remember I was showing this steep right falling wedge on the weekend. So we broke the wedge, back tested it, boom, and we gapped up today. If you weren't already long, you had a little opportunity to buy that first pullback in the morning. Next, chart 29, here's the triple Qs KISS system. Now this did stop out on Friday. Again, it is what it is flat. But again, should the market scream higher, it'll eventually go back long. That's what the KISS systems do. You can see the example of that here where it went long and it got out in April, it went back long in early May, got out, and then it got back in a couple days later. That's the nice thing about the KISS systems. They can right themselves, but they will, whenever the markets do eventually have a 20-30% correction, they'll allow you to avoid that. That's the beauty of them. Chart 30, here's the 4 time frames. Again, similar look to the S&P. ATR is resistance on all the time frames. We're, approaching it on the 78 minutes. Still a little bit of room there. 30 minute. We had that support cycle in the 195 minute I discussed on the weekend. We're bouncing from there as well. Chart 31, SQQQ. I meant to remove this. That was a short idea I had last week, which played out. Let's move on. Chart 32, here's the triple Qs daily. So remember last week we stalled at that resistance area. Anyway, bouncing back a little bit today. The Qs still look like they have a little more work to do. Notice you got a bunch of moving averages up here. You have the 9, you have the 20. So those are all resistance areas, guys. And there's a potential open gap down here that was not filled that, let's say we go up and, get up to this area, then form a lower high and come back down. This could be a target. Chart 33, here's the 60-minute view. Remember, we still have that open gap below. Little bounce today. Chart 34, here's the 2-hour view. Again, we bounced off that uptrend line going back to the April lows. That was a big support area. Chart 35, here's the 30-minute view. Again, you had a wedge into support on Friday. So we gapped out of that today, pulled back. Otherwise, I added fibs here. These could be target areas even if this bounce forms a lower high. All right, guys, that does it for the major indexes. Quick check on futures. Futures are down a little bit this evening. ES futures are down about 6 points, so nothing major. Let's move on. Chart 30, here's the VIX with the volatility, the VVIX, the VIX ratio, etc. Remember, the VIX had closed outside its Bollinger Bands for 3 consecutive days last week. I said a close back inside would constitute a VIX Bollinger Band buy signal. By the way, that's, the same thing that those volatility systems look for that I discussed in the opening, these volatility systems. So this is a VIX Bollinger Band buy signal. Chart 37, here's the VIX itself with the Bollinger Band. So you can see the signal here. So I added the arrow. Again, there hadn't been a signal for a while. Your signals occur when this is outside its Bollinger Bands, upper Bollinger Bands, or lower Bollinger Bands, and then you close back inside. So these are some of the past signals. Generally, this is a pretty decent system. So anyway, gave a signal today. That said, the mean reversion systems gave a long signal on Friday, which was a much better entry, obviously. Next, chart 38, here's the 10-year Treasury yield. Remember, last week found support at that 61.8 fib. Nice bounce from there. Otherwise, bouncing up within the downtrend channel for now. Chart 39, the weekly chart, still monitoring this coil formation. We bounced off the lower portion of the coil for now. Chart 40, here's TLT 20-year bonds. Remember, they move opposite of rates. Again, because the weekly chart, TNX chart has a coil. Well, weekly TLT has a coil as well, as you'd expect. And chart 41, here's S&P versus high-yield corporate bonds. As you know, they tend to move together. What you want to note is when you have divergences or whether or not And what I pointed out on the weekend was the S&P had been weaker shorter term than high yield corporate. You could see the S&P had pulled back a lot more. Now, again, it bounced right off this channel line. High yield corporate was holding up better, so that was a positive sign. Let's quickly review the market sectors I discussed in the weekend. XLK technology, remember, just a perfect pullback to fill that open gap to the 50-day moving average. So far bouncing off of it. Again, it's going to have some trouble maybe these moving averages above 9 and 20-day moving averages. Driver 43, semiconductors, nice rally today. Again, some resistance would be the 9 and 20-day moving averages above. There's an open gap down here that was never filled. Driver 44, banks. This area has been quite strong. Notice today, found support of that 9 EMA. Very strong looking sector. Driver 45, financials. Also pulling back right to the 9 EMA, finding some support. By the way, I added a bank. Regional bank is a long idea in the trade ideas. We'll get to that later. Driver 45, transports. Again, this, remember a couple weeks ago, broke out of this pattern, got into the supply zone, pulled back. But this is support, and it's finding some support there, which you'd expect. Driver 47, healthcare. Broke out, found support at previous resistance, became support, bouncing off of that. Driver 48, industrials. It's been a strong sector too. Looks like it's trying to flag out. Driver 49, real estate, also bouncing, still a very strong sector. And Driver 50, XLE energy, one of the down sectors today. Otherwise, this broken downtrend channel line is potential support. The only issue here we have is so far we only have 3 waves up. So under a bearish view, that could have completed an ABC bounce. But we'll see. First, this broken trend line is support. We'll see if that can hold or not. Moving on to commodities, Driver 51, DBC. This is the weekly commodity index. Again, up 0.2% today. Remember, about a month ago, price stalled right at the coil trend line. It's been forming this coil for 2 years now. Driver 52, crude oil. This is the weekly chart. A few weeks back, it pulled off that coil trend line, down slightly today. Otherwise, still in the same old coil pattern. Driver 53, UNG natural gas. Nice rally, up about 5% today. Remember, this had a heck of a sell-off from the 200-day moving average in June, but that was a support area. You can see that was a support area in April, and we tested it. That was a good area to go long, take a shot, and it's been a nice bounce. Driver 54, copper. So copper has been melting down. That said, 200-day moving average and this demand zone is approaching. To me, that would be an area to take a shot at a long again. Again, got way extended in May on that big kind of parabolic move. Then this area became resistance. But down in here would be a good support area. CPER is one of the ETFs you could buy to play copper. Driver 55, DBA. This has been consolidating since April. This demand zone has been a big and strong area. You can see so far price has been holding this multiple times. Once again last week, bounced off of it today. Driver 56, corn. Remember I showed this on the weekend and it's a tight coil, nice bounce. Up 2.5% today. Nice trade there. Driver 57, there's the weekly. Remember I said this was looking quite oversold, so good little bounce. One area that I'm watching is that I like as well is wheat. So wheat has been downtrending since 2022, but I pointed out on the weekend you have a double bottom support here. You also had support going back to 2020. So to me, this looks like a low risk bottom fishing play for a long. Driver 59, here's the daily wheat chart. Again, what I like is you have a nice MACD divergence at this low and RSI divergence. Again, this is a tradable ETF. You could buy this. Driver 60, here's coffee, bouncing this week. This is your resistance. Kind of wondering if this could be a cup and handle forming. Moving on, here's Bitcoin. This is the weekly. Otherwise, it's down today a little bit, but like I said, I think possibly wave 4 has been put in for Bitcoin, and this is going to go to a new high eventually in a wave 5. Here's the daily chart. You can see the pattern there. Some of the mining stocks we've been showing. Hut has been a great trade. You can see broke out of that cup and handle pattern, back tested it, became support, moving up again. Here's Riot, got a kind of a wedge pattern. Broke out, pulled back, held that 9 EMA, bouncing back. Now here's a couple new ones, guys. BTDR, here's a mining stock. Nice cup and handle look. Look at that little break of the handle there, or the little flag. Looks pretty good. Charber 66, SLNH, another mining type stock. Big one to watch as well. Moving on. Charber 67 US dollar, again, up today, and it's up here a little bit after hours. So remember, this bounced off this support zone. Charber 68, there's the weekly chart of the Dow. Like I said, it's in this coil, weekly coil, that we're going to monitor. Charber 69, FXY, Japanese yen, monthly chart, going back to the 2008. As I've been stating, this is a bottom fishing play. I have a little position in this. I like the monthly wedge, MACD divergence, RSI divergence. I think it's finally a lower risk down in this range. Precious metals, Charber 70, gold, which pulled back slightly today into a demand zone here. So we'll see if it can find support here. You also have the 20 and 50-day moving average. Now, if this area doesn't hold, guys, as I stated on the weekend, I could see it melting down, maybe this next demand zone. But for now, let's see if it finds some support there. Charber 71, there's the tradable ETF GLD. Charber 72, gold on the weekly. Like I said, to me, this is a very bullish count longer term. What I don't know is, did we put in a little wave 5 here, and we're going to have a deeper wave 4? We'll see. Eventually, we'll have another move up in a wave 5. You do have some MACD divergence to the highs. Next. Charber 73, silver. Now, silver's been leaking oil. You can see it lost its 50-day moving average last week. Now, it is finding support at this extended trend line. But you know, the weakness in silver here, maybe this is kind of an early warning on gold a little bit. Here's the weekly view of silver. Again, still looks okay on the weekly. Like I said, we had a major breakout in March from this ascending triangle pattern. Charber 75, GDX, the miners, little bounce today. Too early to say if the high last week was a top for this area or not. Again, your major bottom was there in March 1st. That was our major buy trigger back then for a swing. Charber 76, BPGDM. My concern with this area, I keep talking about this ad nauseum, is this BPGDM is up here at 89%. Remember, this only can go to 100%. So this doesn't have a lot of room to run up. You know, can it go to 90, 92, 93%? Sure. But it's not like it was back on March 1st when this gave a buy signal, you know, when it was in the oversold territory down here under 20%. This is up in nosebleed territory. All right, guys, the final part of the newsletter, let's review trade ideas, STVN. It's been a long idea of mine for a few weeks now from this higher low. You do possibly have a new setup here if it can take this area out. Or if you're long, maybe you could put a stop at yesterday or Friday's lows if you still have a position. Charber 78, NVIDIA, nice bounce today. Now you have the 20-day moving average above to contend with. It's possible you completed an ABC. We'll see. Earnings season, or earnings for NVIDIA, they're well into the future. So earnings aren't going to, you know, earnings aren't going to affect this stock anytime soon. Charber 49 or 79, Ford. It's been an awesome trade idea, swing idea from June. That coil break. Charber 80, Rivian's also been a very good swing trade from that inverse head and shoulder pattern. In fact, it kind of looks like it's flagging here. Charber 81, in AMD, I talked about this on the weekend, was a long play. My target was the supply zone where hopefully it took profits there, because then it got smacked down to the 200-day moving average. That said, we're experiencing a technical bounce off the 200-day moving average. Earnings are July 30th. Here's some that haven't triggered. Now this one, YY, it's been on my list for a while. I actually own a little bit early. It's flagging here. And if it can break out of here, I think it could target up into this area. At least fill this gap. That would be a good percentage move. Charber 83, PACBA. It's a little biotech stock. Little bottom fishing play. Get a nice volume break here. Back test of this little trend line. This could be lower risk entry down here. Again, if this moves just back to this $3 range, that's a good percentage move. Jabber 84, MDGL, it's been on the list as well. If it can clear this resistance, I think this cup and handle plays out. Here's a new one, NYCB. It's a regional bank. It's obviously depressed, probably some sort of earnings thing back here. But it's quite depressed here. You got a heck of a base around 12.15, one to watch. Jabber 86, Nova, little energy play. So we'll see if this can pop higher. All right, guys, that'll do it. We'll see what happens tomorrow and this week. Again, thank you for all your support. And if you're on YouTube, please consider subscribing to us. That really helps us out. Or at the very least, like, comment on the videos. That helps the channel as well. All right, guys, have a wonderful evening. Take care.